Joe Terranova, make some sense out of this for me. I'm looking at the NASDAQ right now, basically flat. The S&P up 0.5% despite these two mega cap tech names just having a really difficult day.
Yeah, so I think Anastasia did a great job identifying the environment. I'll add upon that and say, look, what's the challenge that we're hearing from all these companies in their earnings conference call? They're talking about the headwind of a stronger dollar. Well, guess what? Value of the U.S. dollar is actually down 1% today. So I think it speaks towards having a more diversified approach to the market right now, not having the overweight exposure, which many, including myself, have carried towards these mega cap equities for technology and consumer discretionary. I think it's a moment where you're seeing that growth certainly begin to slow for both Microsoft and Alphabet. And collectively, what's that bumping up against? As Anastasia pointed out, you have the rules-based, non-discretionary funds, all the algorithms that are stepping in and saying, well, guess what? S&P back above 50-day moving average. We don't ask why, we just ask what, and therefore we're buyers. And the 100-day moving average at 39.09, that's very close as well. So you'll see more buying engagement there. I think collectively that's allowing for some resiliency in the market. And then the last quick point is also look at the semis. I think when you look at the semis, you have to ask yourself, is all the bad news priced in? That was a terrible report and certainly awful guidance from Texas Instruments. But you've got the SMH higher, and you have Texas Instrument itself moving back towards unchanged.
Yeah, I mean, some signs of hope there when it comes to the chip sector. But, Brent, I got to ask you, I mean, are you at all surprised when you see what we're seeing from Alphabet? I mean, 5 consecutive quarters of slowing sales growth. Microsoft, such a big part of their company's Azure, growth to fall sequentially. I mean, are you surprised to see the rest of the market basically rally around these mega cap tech names?
I think it's really constructive. And a couple points that, just to add on to Anastasia and Joe, is I really think you got to watch rates. And if you look at the 2-year and the 10-year, they're both down 20 basis points each over the last, I think, 5 or 6 trading days. And so that continues as rates come down, stocks do the opposite and go higher. You also have next week on Halloween, the buyback windows open. And so I think people understand that the buyback windows are going to reopening. So that could be another actually fundamental dynamic that comes into the market and pushes it higher. To me, what's so interesting for investors is I think that if your portfolio was just reliant on the companies the last 10 years that drove your returns, I continue to tell investors is that you have to put together a new playbook. And, talking about Microsoft, Microsoft in 2012 was around $32. In 2002, Microsoft was around $32. So what changed from 2012 to now? It's the cloud. So Satya Nadella came in as the CEO. The cloud, which he oversaw, created a whole new business model. And I think that cloud business is maturing. And so investors need to have other things. And when I look at energy is up almost 2% today. Healthcare is up 189. CALS, which is a free cash flow ETF that we own, is up 1.6%. So I don't think you need these big names to continue to drive all stocks higher, and that you're going to continue to see this dispersion with other sectors that did not have even remotely the performance of large cap tech the last 10 years.